Hi, I'm Lee Stone, and this is your UFXBank Week in Review. Let's take a look at last week's risers and fallers. The euro was mostly mixed versus the dollar this last week. The back and forth left the euro unchanged, and the pair was last trading at 139.25. The British pound had a solid performance against the dollar, drawing in a positive gains for all but one day this week. The pound closed at 160.24, a gain of 2.2%. The dollar dropped again versus the yen. Though the pair traded mostly mixed through the week, the dollar fell 1.15% and was last trading at 80.44. The dollar's seesaw battle with the loonie ended with the Canadian currency edging the dollar by 0.5%. The pair closed the week's trading at 102.12. Oil lost 0.3% on a mostly mixed week and closed at $81.43 a barrel, while gold continues to rise, gaining another 2.25% to close at $1,358 per ounce. In news this week, demand for China's yuan increased significantly, with traders speculating that there will be significant appreciation in the Chinese currency. The Hong Kong Central Bank has been having trouble keeping up with this demand. The US dollar made attempts at a comeback this week. The greenback traded mixed with most of its major counterparts through the week, having its biggest day on Wednesday, but by Friday, most gains were lost. To discuss this further, I have with me here analyst Martin Smith. Hi, Martin. How are you?
Well, thank you, Lee.
So, let's first talk about China and the yuan. There's been a bit of a boost in demand, wouldn't you say?
Without question, yes. China's economy is expanding at a staggering 9.6% annual rate of growth, which in natural situations will be accompanied by an equally impressive appreciation of the value of its currency. However, China, so it seems, has been controlling its currency's appreciation to keep exports competitive. Of course, China denies this, but all signs seem to point to this being the case. After the G20 summit last week, there's been a growing speculation that China will start to allow the yuan to appreciate further. This, in turn, has boosted demand. I think we'll have to see how much the Chinese government is willing to loosen the reins, but I believe that we're likely to see an acceptable rise in the yuan over the coming year.
Okay, so the dollar started gaining on the major currencies this week, but then faltered. What is happening with the greenback?
Well, there has been that had something to do with the volatility in the US stock market. There were midweek declines, which caused the dollar to rise. And when stocks stabilized, the dollar reversed course and returned to its previous position, which is why it ended up unchanged against most of its trading pairs. The dollar may have actually ended positive, except that it appears the Fed is getting ready for another round of quantitative easing. The markets reacted somewhat mixed to the news, and I think the currency responded in kind. There are several factors weighing heavily on the dollar and the US stock market these days, which is playing into investor jumpiness. Also, of course, the elections in the US are going to take place next week, and the non-farm payrolls report is coming out on Friday, and the Fed interest rate decision is also coming out. So this next week looks like a busy one for the dollar.
All right, so this actually brings me to our Ask the Broker question of the week. Let's see. Benjamin Wright of Singapore asks, what can we expect for the dollar in the week to come?
Well, I think we can expect a lot of volatility, that's for one. As I just mentioned, the non-farm payrolls, the elections, the interest rate decision are all happening next week. And any one of these events in a normal week would cause concern and unease among investors. But to receive all of them at once, I think there's going to be a lot of movement, both in the dollar and in the stock market. The non-farm payrolls report is expected at 45,000 versus minus 95,000 prior. And the interest rate and unemployment are expected to remain the same. Statements regarding quantitative easing should also play a huge factor in volatility for any of the US dollar crosses. As I said earlier, this looks like a busy week for the dollar.
Thank you very much, Martin. Well, we hope you enjoyed our weekly review, and we hope you will join us next week. Until next time, be sure to visit us at UFXBank.com for simple, safe, and secure trading. Also, you can follow us on Twitter and Facebook. To submit questions to our weekly broadcast, please email your questions to Martin Smith at AskTheBroker@UFXBank.com. For UFX Bank, I'm Lee Stone. Good luck and happy trading.